Hello again, everyone. Hope you are enjoying Save to Invest. In our previous lectures, we discussed value investing and growth investing. If you haven't listened to those videos, I highly recommend doing so. Today, we're going to dive into another investing strategy called momentum investing. Momentum investors are all about riding the wave. They believe that winners keep winning and losers keep losing. Their goal is to buy stocks that are experiencing an uptrend, as they believe that these stocks will continue to rise in value. On the other hand, they may choose to short sell stocks that they believe will continue to drop. One important aspect of momentum investing is that it heavily relies on technical analysis. Momentum investors use a strictly data-driven approach to trading. They look for patterns in stock prices to guide their purchasing decisions. This means that they pay close attention to how a security has been trading in the short term and base their actions on that information. It's important to note that momentum investors act in defiance of the efficient market hypothesis. This theory states that asset prices fully reflect all publicly available information. However, momentum investors believe that even with all the publicly disclosed information, there can still be significant short-term price movements that the markets have not yet fully recognized. Despite some of its shortcomings, momentum investing has its appeal. For example, the MSCI World Momentum Index has averaged annual gains of 11% since its inception in 1994, compared to 8% for its benchmark over the same period. This shows that momentum investing has the potential to generate higher returns. So who should consider using momentum investing? Traders who adhere to a momentum strategy need to be actively involved in the market. Profits in momentum investing build over months, not years. Unlike simple buy and hold strategies, momentum trading requires constantly watching the market and being ready to buy and sell at all times. Furthermore, momentum investing often calls for continual technical analysis. Momentum investors rely on data to determine the proper entry and exit points for their trades. These points are continually changing based on market sentiment. Therefore, if you're not interested in watching the market every day, there are momentum-style exchange-traded funds available as an alternative. It's important to understand that momentum investing is a highly speculative strategy and carries significant risks. It is more suitable for investors who have capital that they are willing to potentially lose. This style of investing is closer to day trading and has the greatest downside potential. Let's quickly go over the pros and cons of momentum trading. One of the advantages of momentum trading is that it comes with a higher risk, which also means a higher potential for short-term gains. This can be appealing to traders who are looking to make quick profits. Additionally, momentum trading is done in the short term, which means that your capital is not tied up for long periods of time. This allows traders to quickly move in and out of positions, maximizing their potential returns. Another positive aspect of momentum trading is that it can be seen as simpler compared to other trading styles. It doesn't rely on analyzing bigger picture elements such as market fundamentals or economic indicators. Instead, momentum traders focus strictly on price action and the trends that can be observed in the short term. This simplification can be appealing to traders who prefer a more straightforward approach. Furthermore, momentum trading can be more exciting for traders. With its reliance on quick price action changes, this style of trading offers a more dynamic and engaging experience. Traders who enjoy fast-paced environments and the thrill of constantly adapting to rapidly changing market conditions may find momentum trading to be particularly enjoyable. One of the disadvantages of momentum trading is that it requires a high degree of skill to properly gauge entry and exit points. Since momentum trading relies on identifying and capitalizing on short-term trends, accurate timing is crucial. Traders must have the expertise to determine when to enter and exit trades to maximize their profits. This skill can be challenging to develop and requires experience and knowledge of technical analysis. Another drawback of momentum trading is its reliance on market volatility. If prices are not quickly rising or dropping, suitable trading opportunities may be hard to find. Without significant price movements, it can be difficult for momentum traders to identify trends or capture sizable profits. Consequently, traders who utilize this style of trading must carefully monitor market conditions and be prepared to adjust their strategies as needed. Depending on the investment vehicles used, momentum trading may also come with increased risk for short-term capital gains. It is important to consider the tax implications and costs associated with frequent buying and selling of securities. Traders must weigh the potential gains against these additional expenses to determine if momentum trading is a suitable strategy for their financial goals. Lastly, momentum trading carries the risk of invalidation. This means that the entry and exit points identified by a trader may cease to exist without notice. In rapidly changing markets, a missed opportunity can occur if a trader fails to act quickly enough. This can result in lost profits or missed chances to enter or exit positions at favorable prices. Traders must be vigilant and ready to adjust their strategies in response to sudden market shifts. In conclusion, momentum investing is a strategy that focuses on buying stocks on an uptrend and short-selling stocks on a downtrend. It heavily relies on technical analysis and goes against the efficient market hypothesis. However, it is a highly speculative strategy with significant risks. It requires active involvement in the market and constant monitoring of data. Thank you for listening, and I hope you found this lecture helpful. Please subscribe and smash the like button if you can. It really helps us.